Welcome to Quartz Smart Investing. I'm Merrill Brown. Our guest today is David Dietze, Managing Principal and Senior Investment Strategist at Peapack Private Wealth Management. David, thank you for joining us for a second time.
Merrill, it's a pleasure to be with you.
We're wrapping up August this week, a poor month for stocks and the market's worst month of the year, at least as of now. September is typically a very weak month for stocks. Are we in for a rough rest of 2023?
Well, if history is any guide, September could be choppy. You know, they look at the average annual return for each month of the year over the last 100 years. September is the worst. Average annual return negative 1.1% is the only month of the year where historically it's been negative. The real question, of course, is why?
And the answer is?
And the answer is, so we don't invest, based on a single calendar month because we're not quite sure what the answer is. I can give you some guesses. One thing, of course, is we're at the end of Q3. So we've had the earnings reports from the second quarter. We're going to get Q3 earnings in October. So there's a bit of an information gap. As we all know, markets hate uncertainty. They don't know what these companies are going to report, so that could cause some money to stay on the sidelines.
And the S&P has pulled back almost 4% now. What do you imagine the rest of the year holds for the S&P 500?
So we think we'll be higher by the year, but I think
by the end of the year.
By the end of the year. But we think investors really need to be watching inflation and interest rates. Inflation ultimately drives interest rates because interest rates are going to move to reflect what the inflationary expectations are. Now, the good news on inflation, we've seen about 12 months in a row where there's better results. So we're in a much better position than we were a year ago. Of course, the question is, do we continue with that trend or does something throw us off kilter? And of course, interest rates are driven a lot by the Federal Reserve, and they don't know exactly what they're going to do. They're going to be data dependent, but I think all observers will say they're in the late innings of this rate hiking campaign. And so if inflation continues to come down, interest rates don't go any higher, perhaps there's a forecast for a rate cut by next spring, I think that's good news for investors.
Next, David Dietze on whether it's time to rethink portfolio dependence on big tech and a couple of stock tips.